Hola mi gente, on this video, we're going to do an analysis on Robinhood in under 5 minutes. Now I know, how dare you even think about investing in Robinhood after what they did with GameStop and AMC, which was an absolute crime. And to be completely honest with you, I think Robinhood is a great service if you are a beginner, but once you start getting serious in the stock market and actually want some good information, Robinhood's not the place to be. You need to up your brokerage. I personally recommend WEBULL. You can get free stocks with the link down below. But that does not mean that there's not an opportunity here. So it's definitely worth an analysis, especially at the current share price, because it's fallen a lot. And a rule of mine is I personally do not like investing in IPOs until after their lockup, which is typically 2 earnings after the company goes public or 180 days. We're at that point now with Robinhood. So the fact that the stock has dropped a ton off of the highs is after its lockup, and also it has a high implied volatility. You might be saying, what does that even mean, implied volatility? Well, this is super important in a stock like this where I want to be selling calls against my position. The higher the implied volatility is, the more premium I'm going to get for selling my calls. And essentially, a stock that's trading around $20, I only have to put $2,000 down, or maybe even less if I do a poor man's covered call. I can buy the stock or leaps and then sell calls against them weekly or monthly to create a passive stream of income. This serves as a hedge against my position while also making me money weekly. And if the stock was to rise and my covered calls were to be in the money, then I'm okay letting go of my position. But potentially I can hold this stock, do this every single week and make money off of it. I'm talking 4, 5, 6% every single week by using this strategy. So that's really what caught my interest with Robinhood, is the share price being around $20 and the high implied volatility, and we're over the lockup. But I only want to use this strategy if I actually want to invest in the company. Even though this is a great strategy and it's a great way to hedge your position, there are so many stocks out there that you have to be selective. And you got to invest in companies that you actually believe in and that you actually like. And long story short, after we do the analysis on Robinhood, you're going to see why I'm passing up on this stock right now. So yes, I'm not investing in Robinhood, unfortunately, but I definitely wanted to share this information with you all. Look at this drop. It had a high of $85 and it's currently trading at $21.90, and it's definitely in a downtrend. So we don't want to get caught trying to catch a falling knife, and that's why valuation matters so much. And here's my personal spreadsheet on Robinhood. You can have access to this spreadsheet if you like by joining the Patreon. It'll also give you access to a Discord server of over 500 investors. Now, the key takeaway here with Robinhood is that this company is very unpredictable because a lot of the revenue depends on trading of stocks and cryptos. So if trading volumes are down, revenue is going to be down. If we see a stock market crash in a bear market, then that's going to hurt revenues of Robinhood. So it's very hard to predict. But the best we can do is go off of what's happening with the company right now and say that generally that's going to be the trend moving forward. Now, the reason why I'm passing up on Robinhood is kind of twofold, but the main reason is because revenue quarter over quarter is decreasing. It's not decreasing growth, it's actually dropping. If you take a look at revenue in quarter 2 of 2021, it was $565 million. Now it's $325 million. So a negative 35% drop and then a negative 11% drop. Now, based on the current share price, I would have to be okay investing in this stock with a 10 price to sales multiple looking forward. And I'm just not okay doing that with revenue dropping quarter over quarter. If the stock was to drop to a price to sales multiple of 5, then it's worthwhile if we were to invest with that strategy that I mentioned earlier in this video. But a 5 price to sales multiple forward looking gives me an entry price with the required rate of return of 20% at $10.19. That's half of what the stock is right now. This company is just too unpredictable. It's trading at a pretty high valuation and price to sales multiples that I'm just not okay investing in Robinhood right now. All right, that wraps it up for this video. I thank you so much for your time. Hit that subscribe button, ring that bell, and smash that like button. Join WEBULL. You get 2 free stocks worth up to $2,300. You get access to trading from 4 a.m. to 8 p.m. No commission in stocks or options either. It's a great platform. You want to get those free stocks, you got to use that link down below. It's an exclusive link through a partnership with WEBULL. I'll catch you all in the next video. It's been real. It's been fun. It's been real fun. And this is We Are Investing. And together, we are invincible. Hopefully that was under 5 minutes. See ya!